Hey everyone, this is a late review for November 20th, the Friday. I'm doing this on Sunday the 22nd. Um, Doing this late, obviously I don't want to do it late, but life circumstance happened. Got too tired. Wasn't able to do the video review at night. Wasn't feeling that good either that morning. But I am committed to doing it eventually, and right now is that time. So Friday, if you can get the full rundown of every trade and the day review and the trade notes, but I'm just gonna go over. I'm just gonna go over the trades and just talk through them a little and go over like the important parts. Really, I'll be going over the context, I'm gonna start calling it hypothesis instead of the premise. I think it just sounds, well, maybe there's not a difference between the two. I'll look into it. Anyway, I'll call it the premise for now. Might change it later. We'll see. Friday was a good day. The first green day, even though this doesn't exactly matter, I don't mind if it's not green. I don't mind if I, don't end up the day with a profit, or I do end up the day with a profit. But really, at the end of the day, the goal of any trading strategy is to make money. So today is that first day that money was made, and it's clear that I was following the process. After journaling and doing all these trade reviews and everything, I've become to where I'm not like focused on that outcome anymore. I'm more just focused and put all my attention into looking for what I call the layers, the price pairs where there's a clear change of interest, clear changing direction of interest. So if you can see on my screen, you'll see let's say right now this is happening real time, right? And we see 138 trading the bid, 5 trading the offer, and immediately price 73.75 goes offer. And then the same kind of price action where there's that lack of interest at the offer and lack of buying. This is one layer here, one price pair. If we go down one more and the same thing happens, that's 2 layers. Same thing at the third, that's the third layer. That's the entry signal. It's when I see 3 layers, 3 price pairs of the same lacking of interest. That's when I get short. In this example, at the 73.25 or 73 even, with the stop of the invalidation point at 74.25. That would, this bad entry would be 73 even, okay entry at 73.25, good entry at 73.50. Actually, great entry at 73.50, good entry at 73.25, bad entry at 73 even. But anyway, the point is that's what I've been looking for, and that's all I look for now. And it's just an interesting way that I notice my mindset changing, that I'm purely just looking for the first layer to form. Once when I see it, I want to see it be confirmed by layer 2 and layer 3, and then that's when I trade. That's when I get short or go long. But today, what did I want to say? Not today. Friday, I stopped myself out early on trade 4. At trade 4, I thought it was a bad trade, but after reviewing it and going back over it, I noticed it was actually a great trade, and it followed the plan. It followed my plan. It had a clear 3-layer premise, a clear invalidation stop point, and a great risk reward. But the one lacking thing was the entry. The sellers took the bid I can't remember what exact price, but they took in one fell motion, they took 2 bids, and I got filled at the third bid when I intended to get filled at that second or even first bid. So it was a bad entry, and I felt right there and then like, oh, this isn't a good trade. But after reviewing it, I noticed it was a good trade, and it had a clear premise, and all the all the necessary criteria for my plan to execute and to bet on that change of interest. And that's really, I'm in the business of trading the the very short term change of interest at prices near its lows and highs, and I'm definitely going to incorporate that strategy of really trading the change of interest. I think most of my trading for now will be trading the change of interest, but the different strategies I'll implement will be um, um, at different structures. So, um, it could be at a clear support level, clear resistance level, looking for that change of interest, fading moves as well. Just trying to, the ultimate methodology of mine, I would say, is short term changing direction of interest. That's what I'm trading, and each strategy I'll implement has that fundamental uh, trading methodology, but each strategy will be at different structures, um, and different price points, and different support, resistance, things like that. I made a note today as I was reading the new Market Wizards book. Trend lines. There's constant talk about how trend buying above trend lines is like a weak signal, and it's not it's not a good, or it more times than not loses. And I thought to myself, well, if it loses so much because when you buy above it, why don't you just sell above it, and why don't you just fade it? And I've been thinking about that a lot today, about how most traders lose, and how even these past few days when I was making emotional trades, I was losing. And I thought to myself, well, if I brought those emotions back, and and I realized my emotion, what I wanted to do in the market, did I want to go long or go short? Well, if I did the opposite, would I have, would there be profit to be made? Is it lucrative? If everyone loses, if most people, not everyone, if most people lose going into into the business of trading, why not just do the opposite? So if they're emotional and they're trading based on their emotions, why don't they just read their emotion, read what you're feeling, and do the opposite of it? So if I'm right here and I'm feeling like, oh, I should go long, having that method of seeing or recognizing what your emotions want to do, aka go long, and doing the opposite, go short. Because it seems like when you trade off your emotions, and from my past record, when I trade off my emotions, or just instinct or feeling, or a lack of a plan, or just kind of quick trades that come, I'm pretty sure you guys understand what I mean, but those emotional kind of trades where you keep on trading, well, why not just swap it and flip it and do the opposite? So when you think you want to go long, you go short, and you just let your emotions be that kind of signal. So when your emotions get, or your mind or your instincts feel like, oh, I should be buying right now, well, then flip it and go short. And I would think theoretically it would make money due to the fact that the amount of traders that lose consistently. And if you just do the opposite of what you're doing on each of those trades, or if you just do the opposite of it, of what your emotions want to do, theoretically, I would think you'd make money, because if you trade based on your emotions and your feelings and all that, as a beginner trader, you lose money. Or for me personally, I lose money. And if I just let those emotions run and realize what they wanted to do and swap it, could make money. Another thing, just quick thing before I go into the actual trade reviews of the day. I know I today I've been thinking about the common themes of the retail trader, and really that's technical analysis. A lot of support, resistance, trend lines, Fibonacci, kind of trading, and chart patterns, and if that's what most retail traders use, I kind of want to trade against the retail trader. I don't, I want to, when their chart pattern shows a buy, I want to be selling, or when their trend line breaks, when to the downside, I want to buy. I want to trade against the retail traders, trade against those chart patterns they're viewing, and just take the other side of their trades, pretty much. That's something I definitely want to implement later on, and I think that's going to be more of like an intraday swing type trading rather than this quick moving short term change of interest kind of trading I'm trading right now. It's like momentum, I'd say, right now, and the other one would be I would definitely have to incorporate short term change of interest like this at the structures I'm kind of stalking, like the trend, like below a trend line, an upward trend line, below an upward trend line, looking for that short term change of interest from the short side to the long side, or seeing bids are really holding and they're not able to break, and then getting long on that, stuff like that. I just wanted to make note of, because it's just it's something I do want to try one day, where I don't plan the day, I just trade based on my feelings, but I do the opposite of what I'm feeling and just see what happens. But back to the actual Friday trades. I'll start with trade number 1. We'll watch it real quick and then I'll go over it. Alright, so reading the price action on this trade was good. Trade management wasn't as great, but let's go into the context real quick. So obviously we can see a battle happening at the 73.75 bid and the 74 even offer, right? As price trades lower and 73.75 turns offer, we can obviously see there's a lack of interest at the 73.50 bid with 17 trading, right? And then an interest at the offer at 73.75 from buyers. And then as 74 even goes bid, we again see that lack of interest from buyers, or we see a lack of interest from buyers at the 74.25 new offer, but then sellers are interested at the 74 even. And we keep going back and forth through this, Yep. And then we finally start trending down when the change of interest at the 74 even level for buyers start to fade away, and then sellers kind of pick it back up. You'll see here. So you see how watch how it kind of stays in there. And sellers trying to pick it up at the 73.75 bid. Then 73.75 bid, 73.75 goes offer, and we quickly get 94 contracts, a good volume trading at 73.50. Now this is largely different than what has been happening at that 73.50 bid throughout this whole kind of setup. Alright, you see, and then boom, all of a sudden that's where I get short. So we have the invalidation point, the highest, the first layer of 74.25 offer and 74 even bid, where we see a clear lack of buying at the 74.25 offer. That's layer 1. Layer 2 is we see the change of interest at the battle point, the 73.75 bid, 74 even offer. We see a change in that, but I personally, I don't find layer 2, which would be these two prices, to be confirmed until it's not able to quickly come back like it has been. When I start seeing selling at the layer 3 layer 3 bid, that's when layer 2 is confirmed, and that's when layer 3 is confirmed. They pretty much get confirmed at the same time. Layer 2 is like halfway formed, and as soon as layer 3 forms and it really starts forming, that's when layer 2 is confirmed. That's when I put on the trade. So that's what I did. I put on the trade, got filled at 73.25 as volume quickly took out the bid, got filled here. Momentum quickly shifted downwards, peeled one as we reached near the low. Then price started quickly trading up. This is where I should have had peeled one, as 72.50 was holding at the bid, and then buyers were willing to hold the bid higher, and then hit the bid 73 even right there. When I saw that 6 trade go from 6 to 280, I got short. I covered. But that trade, beginning of the day, 632, good trade. You have NQ trading near its lows through the whole time and pushing new lows. You have Dow going from the open, pushing lower too, and eventually pushing near its lows. As ES reached its lows, but it did bounce and wasn't able to break new lows compared to the Nasdaq futures, Nasdaq E-mini. So that's trade 1. I'd like to go over the strengths and the mistakes in each trade. And as I've gone over the premise, the context, the strength in this trade was me being able to not hesitate and to quickly put on the trade. That's something I was trying to work on during that week. Also, the lack of hesitation to peel my contracts out of the position was quite fast and seemed to be without any coloration of market information. What I mean by that is reading the price action only for my benefit and not for an adverse price move. So had I been coloring the price action at the end of the trade and just seeing just looking at the trades hitting the bid and seeing how there's high volume trading into the bid without taking into effect that buyers are stepping up and holding bids and just looking at sell side information. That's what I mean by coloring, and I didn't do that, which is an improvement definitely. The mistake in this trade though was how I peeled that last contract. I should have gone out way sooner than I did. I should have gone out after seeing price tick up quickly and after reaching near the low, and then seeing sellers unable to take advantage of that lack of liquidity on the bid side. After a quick refresh, after the quick push up, as we see here, you'll see as we push down quickly, there's that lack of liquidity in the offer, right? You got 83, 92, 113, big offers here, big offer here, and price trades up, and then bids are now holding. And that's where I should have gone out, right? That's 72.75, 72.50 area, or even the 72.75, 73 offer area. But I did get out once when I saw this. Once when I saw the change of interest with the bids holding, this is where I got out. But I should have been able to read it better with the quick change of interest of sellers not able to quickly trade lower and bids holding. Once when you have price trading up that quick, and then bids holding with a lot of contracts, hundreds of contracts being traded into it, and then holding higher. That should have been a clear sign to get out. That's trade 1 though. I am going to fix this by Monday by thinking more about what it means if price can take up that fast and sellers can't bring it down, and buyers are now holding that higher price. That's clear change of interest, and that's something I didn't pay attention to. And had I paid attention to it, I could have peeled that last contract, or I could have covered the last contract a lot sooner and came out with a bit more of a profit on that trade. Trade number 2 here, we'll watch it real quick and then I'll go over it. Alright, so that's trade number 2. This trade is a good example of why I shouldn't. Had I held this trade, and I'll show you the missed trades at the end. Price did trade lower after this, and my stop wouldn't have gotten hit. I don't actually, it did. It would have gotten hit. Sorry. So what I'm trying to say is actually invalid. I might be thinking of a different trade, because there was one trade where I covered too quickly, and immediately price broke in the direction of the original trade. I think it's this one, trade number 3. But back to trade number 2. So we start seeing price trade lower. We see that that lack of interest now that once was there at the 72.75 offer. We see sellers stepping up, taking the bids, putting 72.50 to the offer. Then lack of interest at the 72.50 offer. And we see this kind of price battle occur at the 72.25. We see it again, the lack of interest at the 72.75. And then the battle kind of breaks. And then this is where I get short, because right here you can see the clear lack of interest at the 72 even bids. And the price ticks up. Buyers hold the 72.25 bid. They step up, take the offer. Right now buyers are still interested at these prices, but they're not interested at the 72.75 offer. While sellers are interested at that bid, 72.50 bid. Sellers bring it back down to that battle point. Sellers quickly put bid to offer, and then as soon as I start seeing some contracts being traded into that 72 even bid that once was non-interesting to the sellers, I quickly get short. Buyers do make price tick up, so I did get a better entry than anticipated. Quickly selling started to increase, but then it started to slow, and it started to really slow once when you see that 71.25 have no contracts traded into the bid. And then we see almost like another layer forming. You see another premise forming with the 54 at the 72 evens, but the lack of interest from buyers at the 72.25s. And then price goes back to that battle point, but still there's the lack of interest, 71.50 bid and 71.25 bid. So we see price come back up, and then we see buyers immediately step up and start trading at the 72.25 offer. This is where I should have gone short right off the bat. Instead, I did hesitate and wait. That wasn't good. It made me lose one more tick than I should have. Could have been a break-even trade, but I lost one more tick than I had to. Because once when I saw this holding and this lack of interest, and I mean this premise here that was forming just got invalidated. The layer one just got invalidated, so it should show me that possibly price is going to start trading higher. There's a change of interest, or the interest hasn't changed from buying to shorting. It quickly changed for a second, but not enough for what I'm looking for. Buyers were able to come back at lower prices, so price didn't have to advertise too much lower to entice the buyers, and sellers decided it's not interesting to them to trade at these prices anymore. So price traded higher, and I stopped. Again, the premise is, it's pretty straightforward with this one. Pretty much all my premises are pretty straightforward. It's really easy to read after the fact. During the fact, it's pretty easy to read as well, I think. You have 9 trading here. About 9 trading at the 72.75 offer, layer 1. You have this battle point that is now 72.25 gone offer, which is holding and no longer interesting the buyers. That's layer 2 formed, and then layer 3 is confirmed once when we see that change of interest from wanting to buy and push 72.25 back to bid. From offer, we see the change of interest from sellers willing to even sell lower, 72 even bid, and that's layer 3 formed, confirmed, trade on, bet. let the trade do itself. Then we see the slowdown and the still desirable buying at the offer as price trades lower, and then you can see a clear kind of lack of interest occurring. 71.25 bid as we trade lower. Buyers unwilling to let 71.50 stay offer, push it right back to bid, and sellers no longer wanting to sell at that price point, while buyers are willing to buy at that price point and drive it back up. And then the change of interest occurring, 72.25. All of a sudden, buyers step up. See it, boom, should have got me out. Trade premise, it makes sense. It follows my plan. You have NQ here throughout the. You have NQ pushing lower. You got the Dow coming off near its highs. Looks like it did a push up. No, I just centered the DOMs. Looked like it was trying to push lower, but didn't really push much lower compared to as much as the NQ, the Nasdaq future E-mini. This one, Nasdaq future traded near the low, where the Dow just traded below the POC, the VPOC, and then couldn't really trade much lower. Seemed to bounce off that VWAP, which I'm just saying that just to make it easily distinguishable on where the range is. I don't use VPOC or VWAP currently in my trading, but I just wanted to make a note of that just so it's easier to notice on where price in the E-mini Dow was trading. One thing I did want to make note of was during this trade, I don't think I noticed the indices, because you can clearly see that Dow's trading near its highs during the trade. Nasdaq's trading near its lows, but as I put on the trade, Nasdaq isn't making new lows and Dow isn't really pushing near its lows. So that could have given me good conviction, or a good signal really, to say, hey, this isn't a full-on market move. This is just a quick short-term change of interest in the E-mini S&P, not a market change of interest. What I mean by that is, all the indices are trading lower, or maybe the Dow and the S&P are trading lower, not just one market. For me, a great trade would to be have the E-mini Dow, the E-mini Nasdaq, and the near its lows or near its highs, and then when I put on a trade in the S&P E-mini, when I find that 3-layer change of interest, then seeing all other indices follow suit and push higher or push lower, as well as the S&P, that is a stronger trade where I might want to put on more size in the future. But for now, I just want to make note of that. That it wasn't like a market move, it was just an intra-market move, S&P. So the strength of this trade again was the lack of hesitation getting into the trade, being able to see the layers form, and as soon as I see that third layer form, take that shot and pull the trigger. That's good on me. That's something I again just talked about, how I've been feeling like I've been hesitating these past trades this week. The mistake of the trade was not taking into account the other indices, definitely. Had I taken into account the indices, it could have led me to realize this move isn't being replicated in the other ones, obviously, because if I'm looking through them, which is the moves I should be looking for. Those big moves, those big market moving moves were all the Dow, the three other three other U.S. indices are also moving with them. With that change of interest I'm noticing in the S&P. Those are the big moves I should be looking for, that I should be sizing up again eventually next year. I'll have in my yearly plan page, or yearly plan paper I'll make at the end of the year. That will probably include how I'll be sizing up in this current strategy and future goals and all that. That's for another day. Back on this trade, had I looked in the other indices, would have had a greater probability of creating a larger move or a break of the current low and high. And after seeing the other indices not really break their lows, could have probably gone out much sooner, even before seeing the change of interest at buying at the 72.25 offer. I traded loser, obviously, but he was still following my plan. But definitely need to work on making note of the price location in the other indices. On to trade number 3. I'll watch it real quick and then I'll go over it. It's one of the longer trades. Okay, so this trade had a clear premise as well. You can see the where is it? So yeah, the 73.75 bid is what I'm looking at. One thing I wanted to make note of before I talk about this is the price action at the 73.75 bid before I enter this trade. I mean, the past trading here, obviously a little battle going on, refreshing at the bid and offer. And then we see sellers willing to push 73.75 from bid to offer quickly. And then we see the buying change the interest at 74 even. We see buyers willing to step up, right? One also, I did miss the earlier entry at where was it, at 4 even and 425 based upon this 73.50 price point. The change of interest at the 73.50, or the lack of interest I should say, at the 73.50 bid, buyers willing to buy at 73.75, and then showing now more interest at the 74 even, which they didn't show before. Which when I see that forms layer 2, and then we still see the momentum come in at 74.25 and then get long. Yeah, so I can't exactly, I made a note here where I wrote layer 1, but to me it seems like layer 1 would be here, the layer 2 would be here, so I don't exactly know how I'd get in at 4 even based on the note I wrote. We'll see here, give me 1 second, let me read it. Mistake. So I'm pretty sure my note was saying that, so this is layer 1, so these two prices, layer 2 would be these two, and then layer 3 would be these two. So getting in at 74.25. That's when I still see the momentum kind of kick in. Anyway, back to the actual trade. I just want to make note of that because that's the mistake. The mistake is missing that earlier entry. But to the actual trade here, we see a very big change of lack of interest at the 73.75 bid. You can see only 3 traded there, where just a second ago, I mean not a second ago, but just like 20 seconds ago, sellers would not let that, did not like 73, 75 being bid. They kept trying to push it back to offer, and they finally died down. And then when price traded back there, sellers weren't willing to sell there anymore. And that clear change of interest is layer 1, right? And then we see the same kind of interest change, the direction change at the new higher prices, and then we see it at the final higher price, layer 3, 74.25 bid, 74.50 offer, get long, and then we start to, I don't see the momentum really. I still see sellers interested at these prices. It's turning into a battle where there's no one clear direction. I do see price trade up. I peel one because it's near the highs, and we're not seeing kind of that price action I'm looking for where there's a clear direction change of interest. Price trades lower. See the battle price, and then sellers decide they are now interested at 74.50. Hold the offer. It breaks. It goes back to bid, but at this point, I exit, and I really don't think I should have exited there. This is a good example of why I should wait till the hypothesis or the premise of the trade is broken before I exit, because this trade did end up to be a winner. One of the missed trades I'll go over is about like 10 seconds after I got out of this trade, and this trade would have been a nice winner had I waited till the premise got invalidated, reached the invalidation point. Price reached the invalidation point, and showed price being invalidated, or the hypothesis being invalidated. But me getting out, me peeling one, right, pretty much, I believe it was at the top. I believe I peeled one at the top. Yeah, I peeled one at the top of that move during the trade. This is, which is good after being able to read that change of interest kind of quickly, and being able to realize, okay, I'm near the top, time to peel one. That was definitely a strength of the trade. Another strength would be the lack of hesitation to get in. Once when I was able to quickly realize that layer 1 was forming, and be ready to take the opportunity when layer 2 and layer 3 was formed. And when it gave me the signal, I pulled the trigger, no hesitation. I would say after rewatching this, I did hesitate a little, but I don't know for sure. In real time, I don't know. I don't know if I don't know if I did, or if I saw this and I was waiting. I'm like, okay, well, it's not changing yet. Sellers aren't hitting the bid, or sellers are hitting the bid. And then as soon as I see that kind of final lackluster volume trading into the bid, and a large volume trading into the offer, maybe that's what told me layer 3 is formed and layer 2 is confirmed. I don't know for sure. That's what I don't like about doing late video reviews or late trade notes, because I can't be 100% sure about what I was thinking in that moment during that day. NASDAQ, it was trading at the 64s, and as this move kind of moved up, it traded up to the 68s, bounced back to the 65s, but kind of slowed down, pushed lower. You can see it's not really doing what I want it to do, where I want it to be pushing near the highs. Dow, on the other hand, was kind of following suit a little more. This price was trading up, and S&P was trading up. Dow was kind of trading up, but not able to really break that opening price and break it higher. That's what the indices were doing. A mistake of this trade was, missing that earlier entry, as I noted before getting into the detail of this trade. Missing that earlier entry. I can't exactly see where layer 3 forms, as I said in my notes. But I can definitely see that changing direction of interest at these price points here, at the 73.50, 73.75, and 74 even. You can definitely see the changing direction of interest, and could have gone in about 2 ticks, maybe 1 tick, better. So could have added to my bottom line, definitely. I'm gonna fix this though on Monday by focusing more on what currently is happening and being primed, ready to be susceptible to those market, those changing direction of interest opportunities at near highs and lows, and that's something I need to put more attention to and focus more and really focus in on price action near those structures, near those highs and lows, the current highs and lows. By focusing more attention to looking for those layer ones forming, I can be ready with the finger on the trigger if layer 2 and layer 3 forms. Once when layer 1 forms, I immediately have my mouse cursor over one tick below, ready to put in that stop. And as soon as layer 2 and layer 3 forms, boom, enter the trade, enter the stop, and then manage. That's something I am going to work on next week, is really focusing on looking for those layer 1s and getting ready to pull the trigger if layer 2 and layer 3 forms. So trade number 4 here, last trade of the day. This is a quick one because I thought this was a bad trade, and you'll see why with how fast I get in, or that price I get in. So we'll watch it real quick and then I'll go over. So fun. Not as strong. Rewatching this, it doesn't look as strong here, but that's why this is kind of a long recording. I just wanted to show the end move here, but it's a longer recording because you got to pay attention to the previous price action at these prices. So especially the 67.75s. I believe this is the trade where we see. Okay, yeah. So price is battling. 67.75 is being swapped between bid and offer quite a good amount, with a lot of contracts being traded into it from both ways. Eventually buyers are able to break the offers at the 8 evens, the 68 evens, and sellers start to fade away at the 70.75 bid, as well as buyers are now fully refreshed and fully have their resting orders in, ready to refresh any hit bids. So price ticks up 68. We see buying step in, buying lack of interest at the 68.25s, and then we see it again, and then we finally see the sellers start to have some interest, right? So we see them have interest at the 68.50s, but buyers are still willing to hold the bid. Then we start ticking up. Buyers no longer willing to hold the bid. What just happened? Sorry, I have to rewatch this because I centered it, and now I need to unload. Sorry, give me 1 second. So right now it's at 68.25, 68.50. Here it's at 68.50, 68. So it seems like in less than a second there was. I'm gonna watch that one more time. Maybe I'm just missing it by scrubbing through this. Let me watch that one more time. Sorry, guys. So, 82, 13, buyers step in, sellers show interest, and then immediately, somehow, while that price action occurs, I can't even see it. But yeah, we start seeing sellers start to have some interest at these prices now, and offer holding a little more with the 184 being traded, and the bids no longer holding. Then we start to see the lack of interest now buying at the 68.50s, which were a nice, which had this price action happening when the 68.25 was bid and the 68.50 was offer. This is the price action happening. This is like 30 seconds ago. Now you can see it's pretty different. It's the opposite. Sellers are now interested in hitting the bids, and the buyers aren't willing to trade into the offer. So that's layer one. We have layer one formed right there. My cursor is over, getting ready to put my stop in. And now we're looking for that change of interest at the next price pair. We see it. We see a lack of buying the 68.25s, 90 trading into the bid at the 68 evens. And then we see a quick break at the 67.75 bid. And the reason, and the lack of interest at the 68 even offer. And the lack of interest to keep that 68 even, or put that 68 even to bid. Buyers aren't willing to defend those prices, but the point is if you look back here, you can see sellers tried breaking the bid at the 67.75 bid, but weren't able to. Buyers hold it down, and then sellers fade away. And then at the 68 even offer, they wanted to buy, and they were willing to hold 68 even as bid too, and then buy higher. And then we see that change occurring here. So I'll show you just a moment. So yeah, we start seeing the change happen. The 68 evens is now seller's interest, and then the 67.75 now has seller's interest and breaks it on 36 contracts, rather than having buyers hold it. So again, clear change of interest from buying interest to selling interest at these prices. So I get short, and I get filled one price lower than I'd like to be, because layer one is these two prices, layer two is these two, and layer three is these two. I'd like to get filled at the bid at layer three. Instead, I got the filled at 67.50. I thought that was a bad trade, and I immediately flattened because of that. But I wanted to record the rest of the move, because had I let the trade play out and wait till my invalidation point, or until the hypothesis or the premise became invalid, this would have been a nice big winner. That's the mistake of the trade. Getting out early without reevaluating. Okay, is my premise? Is there a 3-layer premise? Yes. Okay, is my stop in and good at the invalidation point? Yes. Okay, is it good risk reward? Yes. Okay, this is a planned trade. This is all the 3 criteria for a planned trade. And had I gone over that real quick after putting on the trade, I would have realized the entry price is poor, but the hypothesis, the premise of the trade it has 3 layers with the same directional change of interest occurring. There's a stop placed at the invalidation point, and it's good risk reward. Still with the poor entry price. And this should have been, I should have evaluated this right there and then, and had I evaluated it, I could have stayed in the trade, and this would have been a nice winning trade. I mean, it was a planned trade. It wasn't a emotional kind of quick non-thinking trade. But we'll go over NQ is pushing higher, and then as the trade occurred, push higher, and then trade lower as price traded lower. Same thing with the Dow. Pushing higher, then started trading lower, then started pushing lower with the actual move. The strength of this trade was actually, it's the strength and the weakness was me thinking it was a bad trade and being disciplined enough to immediately flatten my position after knowing after saying to myself, whoa, this is a bad trade, I'm out, per my rules. If I place a bad trade or a trade that's not against my plan, the same thing. But if I place a trade that's not um, that doesn't meet the criteria of my plan, the 3 criteria of my plan, I get out. I flatten immediately, and that's it. I'm done for the day. And that's what I did. And that's the strength of this trade, is how I was able to be disciplined enough to flatten myself out of the position, to not just let the trade hold, even though at the time I thought it was a bad trade, and hold it and just hope. I'm not trading hope, I'm trading interest. Trading the change of interest, not hoping there's a change. Once when I see it, I wait till I get out until I start seeing it come back to the opposite side of my trade hypothesis. But yeah, that's the strength, me being able to flatten right there and then. That's a definite strength I wanted to make note of. Again, the weakness is me not realizing this trade was per my plan. Had I evaluated it and saw that, it had the 3 criteria, 3 layers, invalidation point, clear stop, and good risk reward, it would have been in this trade. It would have been a nice win. And I probably could have there's another missed trade I'd noticed in real time. I will go over real quick in a moment. Could have gotten that move too, but I can never be too sure because it's in the past and that's all theoretical. So, but Monday, I'm going to change this, and how I'm going to fix this mistake is by rethinking. When I think I'm in a bad trade, I'm going to stop real quick and evaluate the premise, the stop placement, and then the risk reward of it. If one of those criterias aren't met, I flatten it. But if all 3 of those criterias are met, I will continue the trade and let the trade play out until the hypothesis or the premise is invalidated. I think I getting out before the premise or the hypothesis is invalidated. I don't know if that's hindering my performance or it's making me cut my losses early before the stop gets hit. But I think currently the winning trades have a common theme of them working kind of immediately. The momentum really picks up. Another common theme is if it stalls, after entering and that momentum isn't there, and I can start seeing the interest that was lacking in the premise start to form at these lower, higher prices. Getting out there, I think more times than not, it will be in my best interest to do so, to get out before my stop gets hit, because seeing that change of interest occur and the lack of momentum during the trade that's adverse to my position, I've noticed more times it's actually helped me than get me out of a trade too early. And I can always get back in a trade, after seeing kind of this lack of, had I gotten out and not been so focused on it being a bad trade, I could have seen, wait a second, there's a clear lack of interest at buying at the 68 evens, and sellers are willing to sell there. That's layer 1, and then it breaks, but then we see the same kind of action occur at this. So this is layer 1. Now I want to see in layer 2 at the 68 evens, the offer hold, and then sellers start picking up in the and taking bid liquidity, right? And then we see that, and then that's layer 2 formed. Now we're seeing the comfort. Now we need to see layer 3 form, and we see that quite quickly with the breaking of the bid at the 67.50. And that I could have gone in maybe at 67 even, 67.25, but had I not been so focused on getting flat on that what I thought to be a bad trade. I could have gone in again, with all my plan's criteria still being met, and it wouldn't have been a chase. It would. I mean, I still see the lack of directional interest to the upside, and I see the changing interest occur, where buyers are no longer interested in buying at higher prices, and then at this price pair they aren't willing to hold the bid, and then even one price lower they aren't willing to hold the bid or even trade at the offer. Had I been able to quickly just evaluate the trade and realize that this trade is not a bad trade, even if I got out and with a break even, thinking that the trade's still good, but I'm not seeing the momentum I need, I could have easily seen this layer one, or I couldn't have easily, I can't know for sure, but theoretically I could have seen this layer one form, the layer two the layer two form, and then the layer three confirming the layer two once when it forms, and then getting short. But again, Monday, I'm gonna double check by going over the 3 criterias again, if I think it's a bad trade, so I don't get out on trades that are part of my plan, as I want to take all the trades that are part of my plan, that are that meet the criteria, of course. Those are all the trades for the day. I don't want to harp too much on missed trades, because they're missed trades. I'd like to go over there's 3 missed trades, and I want to go over kind of what I missed. Well, I'll watch the move. We'll watch the move, but I'm not gonna go too much into it, but I'll kind of talk it over. So you can see layer 1 form, layer 1 gets invalidated. So yeah, you see my cursor now. I wait. And you can see my cursor is on the short side, because when I place my cursor here, that's ready for a stop. I mean, that's right above layer 1. So if I think a layer 1's at a certain price point, I'm placing my stop 1 above it, because that's the invalidation point for my premise. But the thing is I was so tunnel vision, and I didn't realize where we were trading, and we're trading in a perfect spot for me to get long, not short. And had I been more susceptible to the price action and willing to get long rather than trying to get short, I would have noticed this earlier, right? I would have been ready for the move, not right after the move. I would have been ready to, pull the trigger after seeing those offers break and then seeing the momentum follow and such. That's the first missed trade. The lesson here is not to, if one layer breaks, if the first layer breaks and the premise favors the downside, not to just keep looking for new layer 1s as I trade higher and higher and higher. To reevaluate, okay, where am I? What's the price action happening? Not to color the price action in trying to find, okay, finally I see, sellers step up, and I'm seeing the change, and I'm seeing sellers have more interest than buyers, and buyers are no longer interested. Just taking the information for what the market is giving me from the market's perspective and not coloring it. That's the lesson here on the first missed trade. I mean, you have the Dow trading near the highs too and pushing higher on this trade. NASDAQ is near its highs. That's the lesson in missed trade 1. Missed trade 2, this happened right after trade number 3. So as soon as, I believe, let me double check. So trade number 3 ends. So watch. Trade number 3 ends at 6:42:52, and I recorded this missed trade 2 at, sorry, that's current time, 6:42:50, right? So I was not ready to enter on such a trade. I wasn't ready to perceive market action as market price action. I wasn't prepared to take this trade. I noticed in real time, but I wasn't prepared. And you can clearly see the lack of interest, 74.50 bid, and then it starts to change at that price pair, and then it really picks up when sellers have that lack of interest at the 75 even bid. But really, buyers are stepping up and taking that 75.25 offer, which is now interesting. Buyers, buying higher, willing to buy higher even after, price trading here. Showing, that's interest. They're interested in these prices now, and then price broke. The lesson here, I wrote it down. Let me go over it real quick. So again, I should have been focusing more on the price action, as if we watch through it real quick, it was actually very slow compared to normal trading. So you see how kind of slow it's happening here. Look how slow that is. I could have easily gone in and without an issue. I could have read that easily without an issue and gone in without an issue. But again, getting ready to identify that layer 1 and having the hand on the trigger ready as soon as layer 2 and layer 3 forms, confirming the changing direction of interest. That's what I need to work on, and that's the lesson from that trade. Trade number 3, the missed trade number 3. We'll see here. This one's a longer one because it kind of goes back. I don't know if watching all of it would be so great, but it kind of goes back to this. It's really the held bid that was happening at the 72.50s and the interest at the 72.50 offer and 72.25 bid, and then the change of interest over time once when it was able to break 72.20.50 bid and 72.50 bid quite easily. That was the mistrade because it, you could clearly see a layer 1 forming. I'll show you here. So the layer 1 actually, as I'm looking at this, layer 1's not as clear as I thought it'd be, or as I can see. Layer 1, I wouldn't count this price pair 73 even 73.25 as a layer 1. Maybe this 72.75 73 even as layer 1. But I'd have to wait till layer 2, layer 3, maybe even a layer 4 is formed. So, assuming this is layer 1, the 72, 75, 73 even, this would be layer 2. Seeing the change of the 72.25, that's layer 3. And I might need to see one more. So, so layer 4, and then get in. That's what I might have had to be done, but the lesson in this trade is definitely to pay attention to past price action and prices, and if there's a clear interest at 30 seconds ago there was a clear interest, if there's a clear interest at prices 30 seconds ago and then that again changing interest occurs, that's what I'm trading, and that's what I should be that should be a pretty good trade. I'm trading the change of interest, and that's a change of interest. And being able to focus on that is definitely what I need to be doing. Also, it's 6:52, and I made note over the week that there's been a lot of trades, a lot of break of the days, as I call them, between 6:45 and 7 o'clock. Something I've noticed as a behavior in the ES recently during the week. But that's it. That's going to be the video review for the 20th. Friday is the late video review, but I'm committed to it, and I do want to finish it. So yeah, I'll see you guys Monday. Have a good week. Happy Thanksgiving, everyone. See ya.